What is the best chart time frame for day trading? That's what I want to talk about in quick tip fashion. So let's get right into it. First off, the 5-minute time frame is what I would say is the best, but it's kind of a misleading question that I ask. It's not clickbait because I've answered it. My favorite would be the 5-minute time frame, and that's what I would say would be the best one. However, at the core, in more of a not complicated but multi-layer way, is well, you want to use various time frames. You want to use, in trading jargon, multiple time frame analysis to make your decisions. And that would actually be the best one to use, is multiple ones. And let me show you what I mean and why this is so important. So right here, we are looking at the 1-minute time frame on ticker symbol SPY. And very quickly, you can see we have that pink line there, which on my chart represents the 200 period moving average. And the price is now broken down through that 200 period moving average. So I could see somebody wanting to go short. For you beginners, short just means making money when prices go down. So that person would want to see prices go down. And yes, believe it or not, that person could then make money. So the price is broken through there. And as would be expected, you can see the next couple of candles, the price is just hovering around because, well, I mean, it just broke through a significant level. But then right there, you can see, and what you would think, okay, finally, the price broke through that level, needed to consolidate a little bit, but now the price is broken through these lows and the floodgates have opened. I can completely see that and understand the story from that angle, and I would agree. That all is very, very logical. But look at that. Next candle, seemingly out of nowhere, huge green candle. Key phrase there being seemingly out of nowhere. So here we are looking at the 5-minute time frame. And right here is where we just witnessed that breakdown. Maybe you already see it, but does it seem to be, wow, out of nowhere when you're looking at the 5-minute time frame? Absolutely not. You're probably noticing, well, Clay, it bounced right off that purple line there, which on my chart denotes the 50 period moving average. And you're absolutely right. When you look at the 5-minute in conjunction with the 1-minute, you now see, oh yeah, that 1-minute time frame was deceiving when it was breaking down, because on the 5-minute time frame, you had this big old moving average right there that ultimately provided support. So what we're looking at here is both of these side by side, the 1-minute and the 5-minute. And like I said, the answer, you want to use multiple time frames because you can see right there, wow, beautiful breakdown and then just huge green candle. But you look over here on the 5, and all that the 1-minute here was showing us was the bounce off of the 50 period moving average over there on the 5-minute time frame. And that's why you always want to be double checking your thought process by looking at other time frames. So I'm guessing you're probably asking, okay, well, so how many time frames should I be using? What time frames should I be using? And that is where it's going to boil down to personal preference. We're all different. There's no holy grail. So I can't sit here and say, well, use this and this and this. And that's just not how it works. You've got to experiment and you've got to see what works best for you, what feels the best, and what's not going to overwhelm you. So while I can say with certainty, you want to use multiple time frames. You don't want to get locked in on just one time frame. What I cannot tell you is, well, how many should you do and what time frames should you be using? I would definitely say the 5-minute should be in there somewhere, but who knows? Maybe some traders would completely disagree with me in that regard. So what is the best time frame for day trading? Like I said, sort of a bad question because it implies there is one. The right answer would be multiple time frames so that you can always be double checking yourself and ensure that you're not missing out on an angle, which you would have done here in this example. Had you only been using the 1-minute, you would have been thinking, oh, great breakdown. Wow, where did that bounce come from? That bounce was so random. And as we saw, the 5-minute says, no, the bounce wasn't random at all. We had a huge moving average right there, and you just missed it because you got too laser focused on a single time frame. So use multiple time frame analysis. What time frame should you use? I would definitely say consider using the 5-minute and then build around that one, but you got to get it out there and experiment. So I hope this helps. I hope this leads you down to pathways where you can get a better idea because yeah, sometimes those random moves aren't actually so random. So if you found this helpful, if you have any suggestions or questions for our other quick tip videos like this, please let me know down below. And as always, check out the channel as a whole. And if you like what you see, I'd love to have you as a subscriber. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.